Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra. And let's kickstart the show. We've got a management waiting by to chat with us.
Okay, so many earnings, right?
Yeah.
So let's get them going. Let's start with the first management on our show. Sharda Cropchem reported a loss-making quarter. Most of their markets took a sharp hit. The company saw its revenue slide to 638 crore rupees in quarter one, which compares with 824 crore rupees on a YY basis. Its Europe and Latin America revenue came under severe pressure in April to June due to high inflation, recession and adverse weather conditions. The company also posted losses in other markets like North America. Not losses, they were a decline that they saw. So that is something that we'll be discussing with the management. RV Bubna, Chairman and Managing Director of the company, is joining us now. Mr. Bubna, good afternoon, sir. Thank you so much for joining us and speaking with us. I just wanted to understand what exactly is happening in different geographies. Most of the global agrochemical majors have issued profit warnings. If you can explain to us how severe is the situation, is it expected to continue in coming quarters as well?
Madam, the situation is not so alarming. There is one incident, I should say, that which got combined together. There was a very excess production in China, with the prices going down, and the weather not being so normal, little abnormal, with severe droughts in many territories, many geographies, which has also contracted the demand. So demand going down and excess availability has brought the prices down considerably. And the reduction in prices is hurting everybody. And many of our customers have returned the goods, saying that they cannot sell at that price because the prices have gone down, and they foresee lower prices in the near future. And the demand is also got down, so that has led to these factors. But in my opinion, this is not going to be very long-lasting. In the next 2-3 months, of course, it's not a proper season for next 2-3 months, but for the coming by November, December, the demands will improve and the situations will get much better.
So the situation improves only in the month of November and December. Q2,
Madam, this is just a guess. It can start from October also.
Okay. But in your assessment, Q2 should also be similar to Q1.
No.
There is no signs of Chinese companies reducing their production, or there are no signs that demand is picking up compared to what we had.
Madam, there is sign the Chinese companies are reducing the production. Some factories are getting closed, and worst has already passed. Now it's also only going to be better in the near future also. The demand will pick up and the prices will stabilize at the lower level. The improvement in the prices will happen in the third quarter.
Okay, so you are expecting improvement in prices and demand from quarter 3, and of course the next season is not the apt season anyway for sowing and other purposes as well. Let's talk about your margin and revenue growth guidance in that case, because you had spoken about a guidance of 15% revenue growth, 18 to 20% margins. Do you scale that down because of whatever we saw in quarter 1?
Yes, madam, I will scale it down to a revenue growth of around 10% and margins improving to maybe around 15% or so.
Okay, so how much have prices come down from the top, Mr. Bubna, and what is the impact that you're seeing there, especially from China, because you do get a lot of raw materials from there as well. Is there a lot of dumping that is happening from China globally?
Madam, there's no dumping, but the demand is less, so lifting of the goods are less. And the prices in some products have gone down to 30%, what was there about 3-4 months back. So that is a very steep drop, and I think they've touched the bottom right now, and they'll only pick up in the near future.
Okay. So is there any way for you to quantify the high-cost inventory that you're sitting on?
Madam, we have already revalued our inventories second quarter to the prevailing levels, and I think the revaluation is about 70. We have taken a hit of about 71 crores in just the revaluation.
And this hit was in Q1, or it happened in the prior quarter?
This has been already accounted in Q1.
in Q1. There was a hit of 71 crore. Got it.
Okay, that's on the inventory front. What does it mean for your capex plans going forward? You do have cash on your books as well. Will that continue? Is there any plan for capex this year or the next year?
Madam, capex is something which is a continuous process for us, and we can't switch off or switch on whenever we want it. So the capex is going to continue, and we expect the capex to be in the range of 400 crores this year as well.
Okay, all right, Mr. Bubna, thank you so much for joining us and making sense of what's happening in the industry. It's important to know, considering that there's a lot of chatter about what's happening globally with the agrochemical companies as well. That's Sharda Cropchem. The stock is lower by 6.5% as we speak. But we'll slip into a short break now. Tirumala Chemicals Management joins us on the other side to analyze their earnings. Stay tuned.